So anyone on YouTube will be able to hear us on our best behaviors. Why is it 9 already? Daniel, you're giving us a bit of praise and worship this morning.
Yeah. Some encouragement.
Good morning, everyone. Welcome to the Genghis Weekly Investor Briefing. My name is Damaris Mukulu, the Head of Brand Marketing and Communications at Genghis Capital. We're glad that so many of you could join us today. We hope you're keeping safe and warm in this Kenyan winter. Today is especially bitterly cold, so I hope you guys are taking the necessary precautions. Wesley is the only Superman over here. He's not wearing a jacket or a sweater. Some of us have abandoned our polo shirts for something more warm. But I know it's because he's boiling with really great ideas, which both Wesley and Melody will be sharing with us today. So the Genghis Weekly Investor Briefing, I'm pretty sure a lot of you are not new to it. It's a session where we discuss the previous week's developments in terms of macroeconomic outlook, what happened in the fixed income market, and what happened in the equities market. Not only do we take a look back, but we also discuss about what we can anticipate this week. And of course, the most interesting bit personally is always the trading recommendations that they share in terms of fixed income and equities. Our sessions are interactive. We can only be as great as you allow us to be. So we'd really love if you use the Q&A tab to send in any questions you have. If you have any concerns, you can also use the chat function. And then at the end of Melody's and Wesley's presentations, we're going to tackle all the questions comprehensively. The recording is going to be live on the Genghis YouTube channel. So in case you have to hop out for something, fear not, you can always check out the channel for the complete recording. So I believe we are ready to go. So Melody, Wesley, over to you guys. I know, Melody, you're looking for your unmute button aggressively.
Sorry, I was wondering maybe I could share my screen for the presentation.
Yes, please go ahead. You're so nice to ask.
Thank you. Trust you can see it.
Yes, trust the technology. We can see your presentation.
Okay, welcome to this week's investor briefing. So I'll start going through the macroeconomic sector of the market. So last week we saw that the Purchasing Managers Index was released for the month of June, which came at 51. So although this is in the expansionary territory, it came in slightly lower than the 52.5, which was recorded.
Allow me to hop in. We've not moved to the next slide.
Sorry. Yes. So we're looking at the Purchasing Managers Index for June, which came at 51. This is lower than the 52 that was recorded the previous month, but this is mainly due to the deteriorating, or rather slowing down of the economic conditions due to the containment measures that were there. So 3 of the 5 sub-indices, this is the new orders, the outputs, and employment, they recorded a notable decline in their respective numbers. So new orders came in June, increased, but at a lesser degree than in May. A similar trend was seen for export sales. Firms noted that there was a rise in demand from European clients. So this new demand in new orders provided fresh capacity pressures that led to now job increases, though it was at a slower rate than the previous month. So output also increased towards the end of the second quarter, but only at a slower pace. And despite these expansion plans like boosting confidence, there are concerns about COVID-19 restrictions because of the new information about the upcoming peak, let's say, that the health ministry had warned about. So this current situation where there's this mixed signals, it implies that there is going to be sideways trading in equities in the near term. So basically sideways trading is where there are no bullish or bearish sentiments. It's just going to be horizontal. The prices would be horizontal. But for the fixed income, it has benefited from the high liquidity levels, though we think this will taper as now the next quarter rolls by. So we are going to look at the additional state-owned enterprises that the Finance Ministry, the National Treasury released details that are facing the largest financial risks. So this is coming after completion of the forward-looking evaluation of the state-owned enterprises for the year 2021-2022 to 2024-2025. So it was found that these SOEs, in short, are facing a 70 billion deficit each year. So unprofitable SOEs like Kenya Power and Kenya Railways are deemed as the highest, have the highest financial risks due to their elevated debt levels. So KBC, East Africa Portland Cement, Postal Corporation of Kenya, and Kenya Post Office Savings Banks have been ranked as loss-making, having lost their market share. So also other parastatals which provide social services but have been found to operate at below cost is Kenya National Hospital, Kenya National Examination Council, at the River Waterworks Development, and KWS, University of Nairobi, JKUAT, Moi, and Kenyatta University. So the Treasury has warned that these liquidity gaps due to the financial woes might bring like significant risks if they're not addressed. They bring significant risk to the economy. So this might see restructuring of these insolvent or loss-making SOEs, and also they'll have to now find ways to boost their revenues. They get new concessional borrowing. They defer loan payments. They can also get additional transfers from the government or have a debt to equity swap. So the reform strategy will include strengthening the legal framework, improving performance monitoring, enhancing controls and transparency, and bolstering the relationship between these state-owned enterprises and the national governments. So last week, we saw that Kenya Postal Corporation has applied to the Communications Authority to review their postage rates upwards that could see the cost of sending letters locally go up by up to 58%. So this, as we've seen before, this is one of the state-owned enterprises that is currently under the purview of the National Treasury. So they're also planning to lease out part of its offices, office spaces and underdeveloped open spaces to complement its revenue. Recently, also, University of Nairobi Council last week announced abolishment of 5 of the deputy VC offices, replacing them with 2. They've also abolished all colleges and reorganized them from 35 to 11 to avoid duplication. Today morning, we also noted that University of Nairobi has doubled fees for postgraduate and parallel degrees. So that's to ease the cash crunch because of the low student enrollment. So this is going to have an effect on education in the coming future. So this new fees is supposed to apply to the new students joining as of this month. And this is a review of fees in nearly 2 decades. It hadn't been reviewed since then. As we go to the next one. So sorry, 1 second. So in this month's, in the coming calendar, we're looking at the 91, 82, and 364-day T-bill auction on the 15th of July, which is going to come to 24 billion. So moving on to the fixed income, we saw that the secondary market activity declined 6.5% in the week with an overall turnover of 21.1 billion. As we've seen in the recent weeks, the market action has been mostly on the infrastructure bond market segment. For the T-bills, the bids received were totaling 35 billion against the advertised amount of 24 billion, which represents performance of 146%. Just goes to show the amount of liquidity that's in the market. So the yields are continuing their descent, declining 11 basis points across all the tenors, and it's retreated about 1% since its May peak levels. So what we, of the opinion we have is that this gradual decline is just temporary, and the yields may very soon go back to the predetermined levels, which is about 7 to 8%, 8 to 9, and 9 to 10 for the 91-day, 82-day, and 364-day tenors, respectively. So this sale is going to feature triple bond openings. That's FXD1 2012-15, FXD1 28-15, and FXD1 2021-25, and it's going to amount to 60 billion. So on liquidity, so liquidity, as we've mentioned before, was high in the week, and this was reflected by the mop-up activities by the CBK. It used its 7 and 14-day term auction deposits to mop up about 136.97 billion. So also in the interbank market, it signaled higher liquidity with a 4 basis point week drop in the annual weekly interbank rate to 4.85%, together with larger volumes. So as we mentioned before, the main focus of this week is going to be those triple bond primary auctions. So we have the opinion that because of this boosted liquidity, people will look for somewhere to put their money. So this will further boost the uptake of these papers. So also there's a bond that is going to mature, the FXD2 2016-5, that has an outstanding amount of 24 billion. So this would give an additional boost to investors to roll over their funds. So for the week's trade, we are recommending bid levels for the July triple bond primary issue of 10.9 to 12% for the FXD1 2012-15, 12.75 to 12.9 for the FXD1 2018-15, and 13.9 to 14.1 for the FXD1 2021-25. So this auction will be held next week, or rather this week, Wednesday 14th, and it will be the first bond auction of this current fiscal year. So we saw that the debt borrowing ceiling has been moved to 685.5 billion, which is 114 billion higher than the previous target of last year. So this primary bond sale is coming after the tap sale, which saw 37.4 billion accepted by the CBK. And we hold the view that part of this bond proceeds will be used to retire a maturing bond. So looking at another reason for this, the rollover options for these three papers, actually for two of them, the duration is higher than 10 years. So there's the withholding tax aspect where they'll pay less tax. So that's got, but now that depends on the investor, like what they want to do, but that's also a key factor to look into. So now I'm going to hand over to Wesley to take us through the equities market.
Good morning to you. The markets closed on the uptrend as signaled by the benchmark indices. The Nairobi Oil Share Index up by 2.3%, and the NSE 20 up by 1.2% week on week. And volumes were up 6% week on week to a turnover of 2.7 billion. On top gainers, we had CAC extend its stellar run into the week's top gainers, realizing a 41.25% gain on Friday's closure of 3.39 shillings. In part as a result of investor reaction to the announcement of the appointment of Dr. Nelson Kuria as the group's chairman. The announcement was made on 2nd, and the counter closed the week up 13.4%, that's the previous week, on the closure of 2.4. Crown Paints dwindled 26.74% week on week to a closure of 26.30 shillings. On a likely investor anecdote on the rights issue, as we get closer to 15th, when the new shares by the rights issue will be expected to start trading on the bourse. On foreign participation, we saw the foreigners extending the dominance, accounting for 57% of the week's turnover. Foreign investors had an overall net outflow position of 23.54 million and accumulated on Safaricom, while they exited on EABL, KCB, and Equity Group. On the peer review, we see the Nairobi Oil Share Index outperform its peers on the week-on-week on a median of 0.5%. Its PE and dividend yield are, however, below its peer medians of 1.1 and 5.1% respectively. Our trading idea for the week is a hold on Cooperative Bank. The stock is trading at a slight discount to the banking sector peers and at a higher return on equity of 12.5% against the sector's 30.3% average. A weak snippet on something notable: Olympia, they released their financials on Wednesday, and they recorded a 110.7% year-on-year decline in its bottom line from 10.4 million in the previous period last year to a loss of 1.1 million. They also reported a negative EPS of negative 14 shillings. This was as a result of the impact of COVID-19 pandemic on the counter, which is quite heavy on the real estate segment. That's all from us in this week equity review. Thank you.
Thank you, Wesley. So I'll move on to the financial sector developments. So like we can start looking just top level at the banking stocks. So they've been experiencing a rally for quite a while, and now they're trading close to their 12-month highs. We saw equity closing at 49 shillings at the end of the week, which is closing into its 12-month high of 49.45. ABSA was also up at 10.05, edging closer to its 12-month high of 10.25. And KCB actually surpassed its 12-month high of 44.25 to close at 45.5. So we have the opinion that investors are betting on the expectation that CBK will approve the risk-based lending model, which will increase funding to the private sector. That's why we've seen banking sector stocks have been driving value in the stock market. Now to turn to the developments, Jubilee Holdings, it announced an additional investment of around 4.4 billion to its Uganda's Bujagali hydroelectric power plant, which is one of the, or rather is the largest privately financed hydroelectric power project. So this new investment, now it raises its stake, Jubilee's stake in the project to 40.9% from 25%. So we've seen Jubilee strategy is mostly consisted of holding diverse both and conservative portfolio of investments. So this includes quoted securities, government bonds, real estate, unquoted securities, and projects that generate USD returns, which includes CCOM, an internet providing company, Farmers Choice, and PDM. So we find that the need is for this diversification in revenue is due to the slow growth in premiums and as well as increase of underwriting expenses. We had seen last week that the counter had really rallied, but now the price has been relatively stable at the 390 shilling mark, just a marginal increase from the 389 it opened the week with. So Jubilee is expecting to complete sale of its majority stakes to Allianz by the end of this year, and it's estimated that the company will receive about 7 billion shillings, with 3 billion to be invested in its regional businesses. That's in Uganda, Tanzania, Burundi, and Mauritius. So as well, we saw last month that the shareholders had approved amendments to the company's articles of association to allow share buybacks. So that was another reason why the price rallied as it did. Next, we have mobile loan charges that are set to rise after the introduction of the excise duty on the fees on loans and commissions. So unfortunately, borrowers of digital loans will have to bear the brunt of this new tax that was effected on July 1st. So all or significant portions of these new fees on mobile loans are considered as facilitation fees. So this means that the entire loan, a huge proportion of it, is going to attract this 20% fee, and it's going to increase the cost of credit advances in the mobile digital banking arena. So CBK will regulate interest rates charged on digital mobile lenders and borrowers NPLs if a proposed law, which is a CBK 2021 bill, if it goes through Parliament and it's adopted. So this bill proposes that it's going to give a grace period of 6 months before all existing digital lenders are supposed to register with the CBK. So it's going to give other provisions like registration requirements, capital adequacy, licensing fees, and as well as permissible and prohibited activity fees. We've seen that a couple of these digital lenders have been taking advantage of its customers charging exorbitant interest rates. So CBK is coming in to curtail that. So just to note that banks are under the CBK's regulation. So this will mostly this CBK bill will mostly affect the lenders who are typically non-deposit taking lenders. On another, like a side note, due to the increased cost of living, it's set to go up even more because the July actually electricity bills, are set to go even higher this coming month because of foreign exchange fluctuation adjustments, which is going to go up from 77 cents to 1.2, though the fuel charge is going to be at 3.3 shillings per unit of power. So basically this increase, the fluctuation is because of the reversal on Kenya shilling gains on the currency, and because the power had been purchased in dollars, so now that the adjustment has to be put in effect. Also, the Water Resource Authority, the one that regulates how water is used now for the hydroelectric power plants, now they're going to also charge a levy of 1.93 from nearly zero before. We saw that also, besides the high food prices and the fuel costs, we saw that also gas is going to get a VAT charge, and also 20% excise duty on voice calls and data purchases. So it looks like cost of living is going to go up, unfortunately. Lastly, is Cooperative Bank of Kenya. It's launched pension-backed mortgages. So that this will allow customers to own a home through a mix of their pension contributions and a long-term loan. So this product comes on the back of RBA's regulation bill 2020 that paved way for members to use part of their pension schemes to buy a house. So it should, so at the time of purchase, it should be lower than 40% of your accumulated benefits, and it's a maximum of 7 million shillings. So this here accumulated benefits is the total pension contributions plus the interest earned. So we came to note that actually pension-backed mortgages are common in countries like South Africa, Namibia, Mauritius, and Botswana. And in South Africa, for example, the Pension Funds Act permits retirement funds to grant a direct loan to its members or to furnish a guarantee for a member's loan to a third party. But one has to also consider, before you take such a loan, like how much money will you have to survive on when you retire, as well as penalties and tax implications. Now, with the ongoing COVID pandemic, pay cuts have affected pension contributions. So pension-backed mortgages may make things a bit difficult if you're not financially stable at that time. So those are things you should consider as you think about taking such a loan. And that's it for us for the investor briefing. Back to you.
Thank you so much, Melody and Wesley. Melody, you have given us a very somber outlook today morning between the cost of postage. Although personally, I can't remember the last time I sent a letter, but I'm still pinched that the cost of sending a letter would go up. University fees are up, gas, mobile charges. It's quite dire, but there's always hope, right?
Yes, there's hope. Things are going to look up soon. Hopefully.
I need to laugh. It's just that you're such an optimist. I love it. So I don't know if everybody is also a bit in shocked, or they're cold. That I haven't seen any questions coming in. Although I see Andre Abonyo has raised his hand. Andre, I have unmuted you. So if it's a question you would like to ask, you could go ahead and unmute yourself and ask the question. And perhaps we give it another minute to see if there are any questions done, or we call it an early Monday wrap for our session. So Andre?
Hello, how are you?
Great, thanks. You?
Good. So just a question using the Jacuzzi app. I noticed for some of the stocks, we're not able to see the performance of the stock. So probably the one I can highlight is the Fahari iRate stock.
Okay.
Maybe you could just have a look at that on the app.
Okay.
Yeah, I'd appreciate that.
All right, Andre, I have taken note of your name. I'll have a look. I personally haven't logged in this morning. So we'll have a look and then we'll get our IT team to advise you why the price of that particular stock, and maybe there are others. So thanks for bringing that to our attention.
Yeah.
All right, have a great day.
Thank you.
Okay. I've seen two questions come in. So the first is Kamal. There are energy reforms on Kenya Power, but the counter is not reactive. How come? I think Kamal is going to ask a second question. And then Titus, I will address your question after either Melody or Wesley speaks about Kenya Power.
I think I can be able to tackle that one. So for Kenya Power, it looks like it has been having quite a number of issues, and these reforms will take time. So that's why I think the market is not really reacting to the news, because it actually has to see the reforms coming into play. So like recently, we've seen that KRA has issued a notice to auction some Kenya Power transformers, because I think the Kenya Power has delayed to clear it from the ports, and we've seen that the amount of network coverage has gone up from around 56,000 kilometers to 84,000 kilometers. Yet the capacity, like how can I put it? The management of the transmission lines is wanting. So they'll have to put in a lot of funding to take care of that. We've also seen that KPLC, it's only customers are only spending about 3 shillings a day on electricity up country, and you can see for the amount of costs it has used to take the electricity to the last mile, quote unquote. People are not really using the electricity per se. And KPLC has been struggling to reduce its idle electricity at a time when, like now, because of the favorable weather conditions, the energy production has been at an all-time high. And also we've seen the effect of this purchasing power agreements that are more against KPLC, you can say that. And actually President Uhuru Kenyatta came in and formed a task force to look into this into these agreements. So for now, I think that's why people are not very reactive on this counter, because we actually have to see the reforms taking place for people to actually see that this company is going to revert from its loss-making position.
Also, to add on what Melody has said, it's also important to note from the desk that we noted there was a question in terms of volumes traded on Kenya.
Your audio is breaking up.
Close beef. Oh, can you hear me?
No, not the beef.
Let him come to my site.
I think he just likes being here. My suspicions, he's sabotaging the audio. Okay,
yeah. Sorry for that. One thing we noted from the desk is that Kenya Power, there was a relatively high investor participation on Kenya Power. I think there was about 7.1 million traded shares in the past week, closing at the 5th most traded counter in the week. So yes, there is some investor participation, but on a price function point of view, there isn't much happening. But in terms of volumes, there is an investor reaction to it. That's what I wanted to add on.
Thank you so much, Wesley, for adding that on. So Kamal, that's a response to your question on Kenya Power. Titus was asking about the Genghis monthly financial chats. As in Titus, we are touched that you recall that we had this particular segment. It's on hiatus at the moment, but we're hoping that in this second half of the year, we'll be able to kickstart them again. So I'm pretty sure you are linked with us across the different socials. So you will definitely get an update when it's up and running. You're also interested in buying global stocks. Is there a way we can facilitate this? Titus, there is. So Genghis Capital has a partnership with AGM Securities, FX Pesa. Now, if you've attended our previous investor briefings where Matthew Kabire of AGM Securities had joined us, he talked about how you could trade in these global stocks. So Titus, if you don't really mind reaching out to us on info@genghis-capital.com, we can definitely assist you with that second part of your question. And thanks again for remembering our monthly financial chats. Kamal's second question has come in. I like that you're both there. He's asking if buying the NSC counter, because the NSC is a listed company as well, whether it's equivalent to buying into an index fund. I know the short answer is no, but I want Melody and Wesley to give the longer, more elaborate answer. Over to you guys.
Well, I think we will have left the question to you because you have some good sentiments on it. But on a deeper perspective, I will say on a higher vantage point, an index basically is a bucket of shares, which are averaged, and then you trade either on a sectoral point of view or based on performance. And when you look at NSC is just a counter. So buying into NSC is not equivalent as trading into the indices. But from where you're coming from, if I got you correctly, since NSC offers all these services, the point to view is when you see there is more market movement, it means there will be more charges by NSC, so the counter will have something to benefit on. But there is no relationship between the indices performance and the counter itself, because the counter is part of the indices like the all share index. Back to you, Melody. Back to you, Damaris, sorry.
Oh, it's because you're not wearing a sweater. The cold has gotten to you. All right, guys. Thank you for that. There is positive vibes from Wallace in the chat. He says he wants to encourage Melody and Wesley because you guys are doing a great job. I agree 100%.
Thank you.
Hill going on leave was good. He's resting and you guys are doing a
We can't wait for him to come back though.
Maybe
and I should actually put out there, he's very happy. England lost. So he's so happy out there. I hope you won't see this recording because he'll be on my neck. But that's just out there to the football fans.
Okay, so some of us were asleep, but it's okay. Lastly, we have here a concern from Paul Odhiambo. He says he tried to activate his account online, but he still can't purchase any shares. So Paul Odhiambo, I've noted down your name. I'm going to reach out to the client service team. We'll put your email in copy because we have your email from your registration, and just find out why your CDS account is not active. Esther, thank you so much. We're glad you found the presentation useful. I've seen a few questions come in on the Q&A. We have Festo who's asked, can we buy and hold any global stocks, or we have not been mandated that privilege as Africans? Festo, that's a loaded question. I wish Matthew Kabire was here, Festo, but I know we can trade in global stocks. There's no limitation based on your geography, just like foreigners can participate in our local market. You always hear about foreign participation. So we've not been curtailed out. Again, if anyone is interested in trading in global stocks, the email to reach out on is info@genghis-capital.com, or just find us on any social media platform you're on, and we'll be able to guide you accordingly. So, ladies and gents, I believe we've come to the end of our weekly investor briefing. There are no more questions. I hope you guys found this insightful and useful. We'll meet again next week, Monday. I know Churchill will be back. And just want to wish you guys a great investing week. And thanks again, Melody and Wesley. You guys are, you're fantastic. And thanks, Christy, for
Thank you.
Thanks.
the positive comments. So everyone stay safe and warm, and we will see you next week, Monday. Bye.
See you.